Good morning. I'm Peter Milios from the Finance News Network. US stocks rose Tuesday as investors bet the risk of contagion following the closures of Silicon Valley Bank and Signature Bank has been contained. Traders also focused on the latest US inflation data. The consumer price index rose 0.4% in February from January, matching the consensus estimate of economists polled by Dow Jones. The annualized increase of 6% was also in line with economists' expectations. Stocks gave up some gains in the afternoon as investors responded to news of a Russian fighter jet downing a US drone over the Black Sea. Overall, the Dow Jones Industrial Average ended up 1.1%, snapping a 5-day losing streak. The S&P 500 added 1.7%. The Nasdaq Composite climbed 2.1%. And while the headlines have been about the banking sector, according to S&P 500 Global Ratings, 23 companies defaulted in the first 2 months of the year, including 15 in February alone. That's the highest year-to-date total since the GFC, with the most defaults being in retail, media, and entertainment industries. Banks remain the big sector story though, with a number of other regional banks under scrutiny, with declines in names including Western Alliance Bancorp, Truist Financial Corporation, and Zions Bank Corporation. Rating agency Moody's has just put 6 banks on downgrade watch, citing reliance on confidence-sensitive uninsured deposits and significant losses on assets portfolio. This is classic after the event move by rating agencies. And it's not just regional banks. Credit Suisse warns of material weakness in its financial reporting. In its annual report, the embattled Swiss bank said it had found problems with financial controls. Shares were down this morning, despite the firm saying that it had taken steps to shore up its accounting. Charles Schwab is also battling to allay fears about interest rates and unrealized losses after the brokerage's shares fell 40% following the collapse of Silicon Valley Bank. Schwab, which is the largest brokerage in the US with $7.4 trillion in client assets, has seen its shares fall further and faster than its rivals, such as Interactive Brokers in the wake of SVB's fall. In commodity news, gold prices are surging on safe haven demand amid rising concerns surrounding the US banking system following the rapid collapse of Silicon Valley Bank and Signature Bank in New York. Given the recent turmoil, gold has surged to its highest level in nearly 2 months as it recently surpassed the $1,900 per ounce level. And the rally in Bitcoin continues, having risen 16% over the last 24 hours, with digital assets roaring to their highest levels since last summer, despite widespread fears across financial markets in recent days. The rally extended beyond financials, with all of the 11 S&P 500 sectors rising in Tuesday's session. Across the sectors, banking names outperformed the tape as Treasury yields reverted back to higher levels. Banks, investment banks/brokers, exchanges, and asset managers outperformed the sector. The SPY futures are pointing to an almost 1% rise. Thank you for listening.